So we'll move on to probably the most fascinating topic for most Australians, which is the Australian housing market, which has been the most bullish market for the last 30 odd years. And last year, even between COVID, I think Australian house prices rose approximately about 14% over the 2020-2021 financial year. We do have yields where they are at 0.1%, which has been totally supportive of the Australian housing market. So, and we can't really see yields going lower than 0.1. We're basically at our lowest point right now, unless they go to Japan and go negative. But where do you see the Australian housing market being in the next 5 years, and what's your overall view? Is it positive or negative? And do you reckon we'll get a stalling of house price growth in Australia, or do you see the growth continuing over the next 5 years?
Yeah, look, first and foremost, I mean, what drives house prices to me is not immigration. It's basically in major capital cities like Sydney and Melbourne, we're supply constrained, right? It's hard to build new houses easily close to the city where people want to live and work. And as a result, prices come down to affordability. I've always said that. The price of a house in Sydney and Melbourne is determined by the maximum amount that the average homeowner can afford to pay for a mortgage, right? So when you go to a property auction, the last person standing at that auction is the one who's squeezed the most out of their budget to be able to pay for that house. And that's the way it works. And what happens as a result, when interest rates fall, all of us, people don't say, oh, you know what, I can spend less on my mortgage now because interest rates are big. No, they go out to the property auctions and bid more for property because they've got this budget, say at 30, 40% of their after-tax income, some enormous number that they can budget for. So historically in Australia, it's affordability driven by interest rates that have driven prices generally over time, and we've had bubbles in between. So that's the backdrop to what's happened. And so if you look at house prices in Australia prior to COVID, we'd actually gone sideways for 5 years, relative to income. So they were pretty flattish. I mean, we've had cycles, but generally over that time they've been flat. And then we've had the big interest rate cuts from the RBA. And so affordability, home affordability suddenly improved by a lot. And now you've had the V-shaped recovery in the economy. It was like the perfect conditions for a housing rebound, a very strong housing rebound. And that's exactly what we've had. And so I think this will continue to play out until those affordability measures get to points where, again, the average household can't afford to pay more for a property. That's given where interest rates are. And as a result, we're not there yet. So there's probably another 10 to 15% upside in interest in house prices, given where interest rates are at the moment. Now, what that means is when and if the RBA does eventually raise interest rates, it will take the steam out of the market pretty quickly. You won't have a housing crash, but you'll have a leveling off of prices, maybe a bit of a decline. But basically, that will immediately affect the affordability for many people in terms of bidding more for property. And what was interesting last year is that, we've long said you won't get a housing crash in Australia until you get a recession and you get a big spike in unemployment. Well, we had that very briefly last year, and house prices declined by about 5% nationally, not by a lot, because we had all those interest rate repayment holidays by the banks. We had the JobKeeper programs. We had a lot of policy support such that people didn't need to basically sell their houses by the thousands because they could no longer afford their mortgage. And that's what prevented house prices from declining last year. And I think going forward, there's a little bit of a, should we get another recession for whatever reason, you may find that those policy supports kick in again just to keep supporting the housing market and avoiding a big crash. So I think the market generally goes up now in a staircase type fashion. We get periods of relative flatness where prices go sideways to modestly down relative to incomes when interest rates are rising. And then when we get, interest rates decline, you get that catch-up period of prices going up. So I'm pretty, so bottom line, It's hard to be bearish on the housing market, although things on an outright basis look pretty expensive, but on an affordability basis, it's a bit like the equity market. Like equity market looks expensive, but low interest rates have brought us to where we are, and it's the same situation with the housing market.
So that's what I see as well. Like, as long as interest rates are supportive, the government's supportive with their program stimulus, JobKeeper, JobSeeker, house prices will continue to be supported over the medium term. I do see a bit of a longer term, little bit of a bearish view on the housing market, just by the pure fact that millennials and kids are a bit, I don't really want to buy a house at the moment because it's too expensive. And then we've got people moving into baby boomer stage and moving to a stage where the supply is actually going to come on as our older generation become older and older. You start needing to sell houses, downsize. So that's what I'm seeing a little bit over the longer term, but yeah, medium term, I think house prices will just continue to be supported by interest rates and by the government.
Just a quick point on that also. I mean, it often gets overlooked in the reporting of prices in Australia, why they're so unusual. We're a very urbanized country by global standards. Like a lot, we think we've got a big country for the small population, but the problem is we all cram into the major cities. So if you look at the US, our congestion, our level of urbanization is a lot higher than the US. So we're very centralized, and as a result, proximity to major capital cities is at a premium. And then we've got the supply constraints in terms of not being able to build high-rise apartments easily in the suburbs, for good or bad. I mean, people say we should be able to do it. People say we shouldn't. They don't want to change the character of their neighbourhoods. But it's a combination of being highly urbanized, everyone wanting to live in Sydney and Melbourne, or even the other major capital cities, not having a lot of other cities, and then having supply constraints in building higher within those cities, which is ultimately what's keeping prices relatively elevated by global standards.
Yeah, exactly right. So everyone wants to pay a premium, and will pay a premium if you're going to live. I can live 10, 15, 20 minutes away from the city. If I can live that far away, I'll pay a premium. I'll pay the extra couple $100,000 on my home.
Yes.
For the same home to live just closer to the city, ease of travel to and from work,